HBAR has been bleeding for 30 days straight, down 13%, with token terminal showing red across every single metric. But sometimes the best opportunities hide in plain sight, especially when a billionaire ruler just handed your blockchain the keys to an entire judicial system. Dubai didn't just choose any random altcoin for their court expansion, they picked Hedera. And the implications? They're about to reshape how we think about enterprise blockchain adoption. Sheikh Mohammed bin Rashid Al Maktoum just dropped a legal framework that's sending shockwaves through the DeFi ecosystem. The Dubai International Financial Center courts aren't just expanding their will services anymore. They're rolling out AI-powered mediation and notarization services, all secured on Hedera's hashgraph network. This isn't some experimental pilot program. This is institutional-grade, government-backed blockchain integration happening in real time. Dubai's positioning itself as the global hub for tokenized assets, and they've chosen HBAR as their infrastructure backbone. But here's where it gets interesting. While fundamental catalysts are building, technical analysts are spotting something massive brewing on the charts. Market analyst Javan Marks has identified a pattern that could send HBAR parabolic. We're talking about a potential 123% rally targeting $0.504, and that's just the beginning. The $0.504 level isn't arbitrary. It's a psychological and technical fortress that HBAR has failed to breach multiple times. Every previous attempt has been met with selling pressure, creating a wall of resistance that's been building for months. But consolidation periods don't last forever. After extended accumulation phases, breakouts tend to be explosive, especially when fundamental catalysts align with technical setups. Think about it. Enterprise adoption accelerating, government partnerships expanding, developer activity increasing, yet the price action remains suppressed. That's textbook accumulation behavior before major moves. The cryptocurrency market loves narrative-driven rallies, and HBAR's story is writing itself in real time. Enterprise blockchain solutions, sustainability tracking, supply chain management, tokenized assets. These aren't speculative use cases anymore. They're revenue-generating applications running on Hedera's network right now. So what happens if HBAR breaks $0.504? The next major resistance sits just below $1, a level we haven't seen in ages, but one that's becoming increasingly realistic. A move to $0.504 represents a 123% gain from current levels. But breaking that resistance could trigger algorithmic buying programs and FOMO-driven retail accumulation. When psychological barriers break after extended consolidation, the moves tend to be swift and substantial. The fundamental backing is undeniable. Hedera's hashgraph technology processes transactions faster than traditional blockchains while maintaining enterprise-grade security. Major corporations are already building on the network. Google, IBM, Boeing, Deutsche Telekom. These aren't crypto-native companies experimenting with blockchain. These are Fortune 500 enterprises deploying production-ready applications. Dubai's judicial integration adds another layer of legitimacy. When governments start building critical infrastructure on your blockchain, it's not just adoption, it's validation of long-term viability. The DeFi integration angle is equally compelling. As traditional finance institutions explore tokenization, they need networks that can handle institutional volume while meeting regulatory requirements. Hedera's consensus mechanism and enterprise partnerships position it perfectly for this transition. Supply chain transparency, carbon credit tracking, NFT marketplaces, these use cases are generating real revenue and driving network growth. While other Layer 1 blockchains chase retail speculation, Hedera's building sustainable enterprise-driven demand. Now, let's be realistic about market conditions. The broader cryptocurrency market remains volatile, and regulatory uncertainty continues to impact altcoin performance. Bitcoin's dominance fluctuations can overshadow individual project fundamentals, regardless of how strong they appear. HBAR's recent 30-day decline mirrors broader market weakness rather than project-specific issues. When institutional money flows back into crypto markets, undervalued assets with strong fundamentals typically outperform during recovery phases. The $0.504 resistance level has rejected previous breakout attempts, so there's no guarantee this time will be different. Technical analysis provides probability assessments, not certainties. Failed breakouts often lead to deeper corrections, especially in volatile crypto markets. However, the confluence of factors supporting HBAR's bullish thesis is rare. Enterprise adoption, government partnerships, technical innovation, and undervalued price action don't align frequently in cryptocurrency markets. Dubai's blockchain strategy extends far beyond single partnerships. they're building comprehensive digital asset infrastructure from crypto regulations to Web3 licensing frameworks. Hedera's integration into their judicial system represents one piece of a much larger puzzle. As traditional finance institutions explore blockchain solutions, they prioritize networks with proven enterprise track records. Hedera's hash graph technology offers advantages over traditional blockchain consensus mechanisms: faster finality, lower energy consumption, predictable transaction costs. The tokenization trend is accelerating across asset classes: real estate, commodities, intellectual property, financial instruments. These markets require blockchain networks capable of handling institutional volume while meeting regulatory compliance standards. If HBAR successfully breaks key resistance levels and sustains bullish momentum, it could attract significant institutional attention. Enterprise blockchain solutions represent a growing market segment, and early leaders tend to maintain competitive advantages. The convergence of Dubai's judicial integration, technical breakout patterns, and enterprise adoption creates a compelling investment thesis for HBAR. While no cryptocurrency investment is guaranteed, the probability of significant upside appears elevated based on current market dynamics. Key levels to monitor: $0.504 for initial breakout confirmation, then psychological resistance near $1 for extended rally potential. Volume confirmation will be crucial. Breakouts without accompanying volume tend to fail quickly. Remember, cryptocurrency markets remain highly speculative and volatile. Position sizing and risk management are essential components of any investment strategy. If you found this analysis valuable, smash that subscribe button and hit the notification bell. The cryptocurrency market moves fast, and staying informed gives you the edge needed for successful investing. Crypto disclaimer: this content is for educational and informational purposes only, and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential for total loss of capital. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial advisors before making investment decisions. The creator of this content may hold positions in the cryptocurrencies discussed.